Welcome back to Power Lunch. Some new data out this morning. Pretty gloomy picture of the housing market as new home sales fell nearly 14% in May. High mortgage rates and affordability are continuing to challenge buyers. And that was the biggest monthly drop in almost 3 years. Let's get some more insight on what's going on here with power broker Ryan Serhant, the founder and CEO of Serhant. And Ryan, I can't resist. So, I mean, we've got all the developments in New York City in particular today, right? Mamdani and all the rest of it. Then you have kind of this broader national story of what's going on with home prices. I don't know which of the two you think is more pressing right now.
They're all pressing all at the same time. Here's what I'll say. First, everyone needs to stay calm and carry on. Okay. Headlines can be contradictory. So if we talk about the housing market to start, home prices have grown at the slowest place in 2 years. Home prices have hit an all-time high. The market is dynamic. It's competitive, but not frenzied the way it was. Buyers have more power. Sellers might have to negotiate and give concessions, but also at record highs. So when you look at these headlines and they say, oh, the market's the slowest it's been in 3 years, as it kind of finds a new normal, but we've also hit record highs. So it's okay if sellers are having to negotiate. It's okay that buyers have more options to choose from, and it's okay that they have a little bit more power. Inventory right now is growing. We have 20% more homes on the market right now year over year, and it's still not enough. Seasonally adjusted annual sales are flat for the third year in a row for just about 4 million home sales nationally. So that's context to where we are. But if your home is priced appropriately, it sells. Yeah. There's significant demand right now. If it's not, it will sit. And then New York City is a different story.
I know. Do you want to talk about it? What's your take?
Sure. I can talk about it. I think, and I wasn't intending to when we booked this, but here's what I'll say. Someone told me a long time ago that the road to hell is paved with good intentions. And it's true. Like, why did New York City rise to greatness from the mid-90s to Bloomberg, right? You had plummeting crime. You had an economic boom. You had the quality of life skyrocketing. Okay, tourism boomed. I think 33 million tourists in the late 90s, well over 50 million tourists a year by 2013. You had public and private innovation. You had a real estate renaissance. And you had this brand of New York City as being globally accepting and globally cool. New York City meant aspiration. What happened after Bloomberg? You had a decline, okay? The de Blasio era. Crime rebounded. You had an anti-business sentiment. You have increased homelessness and a mental health crisis. You have fiscal irresponsibility. You have declining schools. You have gifted and talented programs that have been scrapped. Charter growth is stalled. And you have COVID response missteps that I think a lot of people yesterday put on Cuomo's shoulders, whether they were his or not.
True.
So why is the real estate market and a lot of income earners who pay taxes in New York City panicking as of yesterday? Well, first, the election's not till November. It's just a primary. And as we saw last November, primaries aren't always indicative of election results. But so far, as progressive as he's been somewhat of an anti-capitalism crusader. And I think capitalism with good intentions is good for a city like New York City that is in a budget deficit at all times. He's talked about defunding the police and been part of that ideologue. It increases fear, fuels crime, right? He's talked about anti-growth, anti-job. He's opposed rezoning, and he's had, and pro-business incentives. He wants rent control everywhere, even on new construction. That's going to create zero private.
Ryan, hey, it's Brian. Sorry.